Lost 2 lakhs in stock market, then made 7 lakhs. Here's what changed. I started my stock market investing journey with a capital of 10 lakhs, full of hope and excitement. But within just 6 months, my portfolio dropped to 8 lakhs. That 20% loss was devastating, and I was on the verge of quitting. But instead of giving up, I took a hard look at my mistakes, adjusted my strategy, and ultimately grew my investment to 15 lakhs over the next 18 months. Let me share what went wrong and how I turned things around. Initially, I relied heavily on tips from friends and random Telegram groups. I bought stocks without doing proper research, jumping into penny stocks with the unrealistic hope of quick 10x returns. I traded frequently, racking up 15,000 in brokerage fees and taxes, all while panicking and selling during market dips, thereby booking losses instead of holding. I never used stop-loss orders, which meant I held on to losing stocks in hopes they'd bounce back. Worst of all, I invested my entire Rs 10 lakhs in stocks without any diversification. Lost 2 lakhs, 20% loss in 6 months. After re-evaluating my strategy, I stopped blindly following tips. I began conducting thorough research on companies to understand their fundamentals. I shifted my focus towards quality large-cap stocks like Reliance, HDFC Bank, TCS, and Infosys. I decided to allocate 70% of my investment to index funds like Nifty 50 and Sensex, reserving only 30% for individual stocks. I also stopped frequent trading, adopting a long-term holding strategy of at least 1 year. I embraced SIPs even during market downturns, buying more shares when prices were low. To improve my trading decisions, I learned technical analysis for better entry and exit points and set a stop-loss for every stock to limit my downside. Portfolio grew from 8 lakhs to 15 lakhs, 87.5% gain in 18 months. The stock market rewards patience and discipline more than it does impulsive gambling. For beginners, index funds offer a safer and more reliable investment option compared to individual stocks. Market crashes should not be seen as moments to sell, but as opportunities to buy. Understanding the market through research and knowledge is more significant than relying on tips from others. Long-term investing consistently outperforms short-term trading. In my next segment, I will delve into specific strategies for conducting effective research in the stock market and how to identify promising stocks. The stock market has the potential to create wealth, but only if you approach it as a serious investment rather than a gamble. By learning from my mistakes and sticking to a disciplined strategy, I was able to turn my initial losses into significant gains. Remember, investing is a marathon, not a sprint.